dialogue to our community. One of the ways we do this is through our Global Perspective Speaker Series. This is where we collaborate with leading experts to share their research and their broad perspectives, broadening our understanding of the world in which we live. Today, the Speaker Series is one of our main programs. It was created to spark conversation and inspire action around some of the most pressing challenges and ideas shaping our world. Each topic is selected through community input and through global trends, issues that may be at the forefront internationally, whether we are yet discussing them here in Whistler. This programming would not be possible without you, the ticket purchasers, the series pass holders, our gracious donors and sponsors, so thank you. I'd also like to give a big thank you to the sponsors for the evening, Virgo Digital Asset Management, the McLean Group, BD Living, the Fairmont, and Whistler Blackcomb Epic Promise. Thank you so much for helping bring these conversations to our community. And now before we begin, just a little bit of housekeeping. If you can kindly turn your phones on silent, we are recording this evening's presentation. For those needing the restrooms, they're just down the stairs and to the right. And for Q&A, we have carved out a good amount of time, so if you can hold your questions till then, we'd be really appreciative. And with that, I will turn the mic over to board member Adam Seedsman.
Thanks, Sam, and good evening, everybody. The Whistler Institute welcomes Dr. Victoria Lemieux, globally recognised blockchain expert and professor at the University of British Columbia, for an evening exploring the transformative impact of blockchain technology and one of blockchain's most well-known use cases, cryptocurrency. Dr. Lemieux will provide a clear, accessible breakdown of blockchain and crypto fundamentals, ideal for both newcomers and those well-versed in both. Key themes of this evening's presentation will include the rise of stablecoins and central bank digital currencies. It'll be quite interesting to hear about that. How regulators around the world are shaping the digital asset landscape. Ways governments, financial institutions and major organisations are experimenting with tokenization and smart contracts. And the emerging convergence of blockchain and artificial intelligence. This evening's presentation will explore how these developments may shape the next decade, from financial systems and innovation to governance, transparency, and society at large. We will all gain a global perspective on why blockchain's evolution matters for our collective future. A little bit about our speaker this evening, Dr. Victoria Lemieux. Dr. Lemieux is a Professor of Archival Science at the University of British Columbia's School of Information, which she's going to elaborate on a little bit later in terms of how do you go from archival sciences into blockchain. Co-founder and co-lead of blockchain at UBC, the university's top-ranked multidisciplinary blockchain research cluster. An internationally recognised expert in blockchain, digital trust, transparency, information governance and IT security. Dr. Lemieux has extensive leadership and professional experience, including roles as a professional archivist and records manager in the public sector, Vice President of Information Governance and IT Security at a global investment bank, a senior public sector specialist at the World Bank, Chief Information Security and Privacy Officer for a health intelligence company, a consultant to the United Nations, Commonwealth Secretariat and the Inter-American Development Bank. Dr. Lemieux's research focuses on risks to trustworthy records and their implications for transparency, accountability, financial stability, and human rights. She contributes to international standards through her involvement with the International Standards Organization's Technical Committee on Blockchain and Distributed Ledger Technology. She holds a doctorate in archival science studies from University College London and has been a certified information systems security professional since 2005. Her accolades include the 2015 Emmett Leigh Award for Outstanding Contributions to Records Management, a 2015 World Bank Big Data Innovation Award, and a 2020 Blockchain Ecosystem Leadership Award. I don't think it takes too much to think that she's very well known and respected. Notably, Victoria is recognised as one of Canada's top 20 women in IT security. Dr. Lemieux has also authored and edited acclaimed articles and books, notably Financial Analysis and Risk Management, 2012, Building Trust in Information, 2016, Building Decentralised Trust, 2020, and Searching for Trust, 2022. Before I welcome Dr. Lemieux to the stage, I wanted to let you all know that we have an additional speaker this evening who will present after Dr. Lemieux. Kevin Jiang, the CEO and CIO from Virgo Digital Asset Management, this evening's speaker series supporter and sponsor. We will provide a brief presentation on the market outlook for cryptocurrency, particularly Bitcoin, as well as providing an overview of Virgo and the digital asset space, which I think will be a great contribution to this evening's speaker series. Now, would you please join me in welcoming Dr. Victoria Lemieux to the stage for this evening's presentation.
Well, thank you very much for that very generous introduction, Adam. It's such a pleasure to be here. Thank you so much to the Whistler Institute for the invitation to join you this evening. I'm really, really honored. And it's such a pleasure to be back in Whistler. I haven't been here for so many years. And I just, driving up here today, realized suddenly, wow, this is what I've been missing. I need to come back here. I need to bring my family back here. So it's just really great. Thank you so much for the invitation. So we've got a lot to unpack because there's just a lot to understand about cryptocurrency. I'm not sure where everybody is in terms of their understanding. But maybe we can start with Bitcoin. You may have heard of Bitcoin. Hands up, who's heard of Bitcoin? Okay, good. So we're starting on a good note there. Okay, so I'm not going to ask you who holds Bitcoin. That's not, you never talk about how much Bitcoin you hold. But I think we've all heard of it, and we've all heard different things about it. So if you hold Bitcoin, you may have heard that Bitcoin price is falling, and it's falling quite drastically. So literally, it was US 96,000 when I left Vancouver this morning, and by the time I arrived up to Whistler, it had fallen to 86,000. But that's Bitcoin. It is very, very stochastic. It goes up, it goes down by quite a lot, and that's what makes a lot of people nervous. But I have brought a friend along who's going to help us unpack all of that. So I'll talk about that in a moment. But you may have also heard that Bitcoin and cryptocurrencies, well, that stuff is just used for crime, for money laundering, for cybercrime, for scams. And so there's a lot of negative press about Bitcoin and cryptocurrencies as well. And it's like those, people down south, the Trump people, they're all into this Bitcoin. So there is a lot of kind of negative chatter about Bitcoin. And you may have also heard, and especially being in such a beautiful place as Whistler, no doubt, everybody's concerned about the environment and sustainability, as we all should be. You may have heard that Bitcoin just uses a lot of energy, the energy of a small country, and it's really not good for the climate, so we should just ban it completely. So there's a lot of talk, there's a lot of chatter about what this is and how we can make sense of it and how it might affect our lives. So I'm going to try and unpack a little bit about what Bitcoin and what my research focuses on is the underlying technology, the technology that underpins Bitcoin and makes it work, which is called the blockchain. And it makes a lot of other things work too. So in the crypto space, we talk about this as going down the rabbit hole. So you kind of start off like learning a little bit, and then they go like, this is really interesting, and this is like complicated, and I need to learn more. And then pretty soon you're like Alice going down the rabbit hole, and you're just going deeper and deeper, and it can get strange, just like Alice going down the rabbit hole. But we're going to try and talk about the basics of what Bitcoin and cryptocurrency is, and how it works, and what gives it value. So that's really important for, I think, for you to understand, like, why is this stuff really important? Like, why is it new? Why are people thinking it has any value at all? And then I'll move on to talk a little bit about the big picture of Bitcoin and cryptocurrency in global perspective, and just kind of give you the very high level. And then the good news is, because any money that I've ever made on Bitcoin has been completely by accident, because I've been doing research. So we're actually going to have an expert here. We've brought along Kevin Jiang, who is the CEO and CIO of Virgo Digital Asset Management. Virgo CX is the name of their crypto trading platform. And he has a wealth of expertise. He is also one of Blockchain at UBC's industry partners, and has been an amazing industry partner for us. And so I couldn't really, I think, have a better friend to help you unpack and understand the cryptocurrency aspects and Bitcoin aspects of the talk tonight. So let's all keep it in perspective for those of you who do follow the price of Bitcoin and cryptocurrency, and be reminded that in 2011, the price of Bitcoin was $1 US, $1. And so the fact that it's dropped to 86,000 US is okay, it dropped, but the price escalation since 2011 is rather remarkable. And that just speaks to how money isn't, it's not an objective thing. Money has always been something that is constructed, socially constructed. It is something that we ascribe value to. And so you can create money out of thin air, it seems. You can create something out of value from thin air. But there's a lot of work and a lot of social capital that goes into it. So as it turns out, it's not really thin air. It is the technology, the social capital, and also the record keeping, which I'll talk about. So how did I get into Bitcoin? Well, it's the record keeping. So Bitcoin is built on the blockchain, and blockchain is nothing more than a newfangled form of record keeping. It's a distributed, transparent ledger. So for somebody with a background in archival studies, as Adam said, I did my PhD at University College London in archival studies. And so when I was studying for my PhD there, my dad, he's like, so what are you doing your PhD in again? It's my dad. It's like, archival studies. What's that? Oh, it's about, records and how records are generated and kept. And you mean you're doing a PhD in filing? So, yes, Dad. He's an engineer, or, he's retired now, but he was an engineer, so it's like, filing? Okay. But yeah, I did my PhD in filing and record keeping. And so this is part of what gave me the perspective to be able to understand how transformative a new form of record keeping this Bitcoin and this blockchain could be. Because when we think about records, what aspect of our lives is not touched by record keeping? Everything. From accounting, how we keep track of the money that we have, and the banks keep track of it, and our accountants keep track of it, and so on, to every other, our identities, our memories, everything. It's all bound up in record keeping. So when we have a technology that transforms record keeping, I don't know how you can conclude anything but that it's going to change everything. So get ready. But of course, it took a lot of time for me to convince other people at the university that this was the case. So I'm going to rewind a little bit. So yes, I did my PhD in archival studies, but before then, I was working in Kingston, Jamaica as the university archivist, and I worked there for 9 years. And during that time, there was a banking crisis there. It affected Jamaica. Basically all of the banks that were indigenous to Jamaica failed. There was a huge shock to the other banks, Canadian banks among them, in the Caribbean region as a result of that. And so I studied the information-related causes of the Jamaican banking crisis for my PhD. And fun fact, one of my advisors was Philippe Aghion, who just won the Nobel Prize for Economics. So I had good advice while I was at University College London. He's also the chief architect of this idea of creative destruction and how new technologies, transform the economy and so on. So an amazing man, and I was very lucky to be advised by him. And so basically what I was arguing is that information and the lack of information in particular can cause systemic banking crises. So fast forward a little bit. After my PhD, I decided, okay, I've written about the banking crisis. Time to go and work in banking and put some of my ideas to the test. So I joined a global investment bank in London. I moved to London, and I was working in investment banking. And then along came 2008. 2008, it was about February of 2008. Well, it was indeed February of 2008. If, for those of you who can remember back to those days, there was a bank called Bear Stearns, and it had a near miss. It basically, a run on the bank, and it was saved at the last minute. And that is when people started to wake up to the fact that, uh-oh, we're going to have a serious macroeconomic crisis, a global financial crisis. And I could feel it. I was in London, I was living in London, I was commuting back and forth from my bank to home, and the tension on the tube was incredible. You could just feel it, people like, ooh, bracing for impact, right? So July of 2008, I started to, I started to feel the tension. I said, maybe it's a good time to move back to Canada and get out of banking. And so a job at the University of British Columbia opened up in the school where I had graduated from a master's. And so I decided I was going to take that job and I was going to come back to Canada. And I had a young daughter, so I thought, this really makes sense. Vancouver's a great place to raise her. And so I moved back to Canada in July of 2008. And I knew it was kind of feeling like it was going to be a bloodbath out there. And I said, better to study it. I've studied one bank crisis, I'll study another one. And indeed, September, Lehman Brothers collapsed, and it was a bloodbath on the street. Like literally people I knew wandering around shell-shocked with boxes in their hands, because I knew people that worked at Lehman Brothers, and Lehman Brothers is what set it off. So from my comfortable sinecure at the University of British Columbia, I started to look at the global financial crisis, and I could see, some of the things that had led up to it, also involved in how record keeping was done. And so I started to work with the US Treasury, because at the time the US Treasury wanted to understand the systems and the mechanisms by which this crisis had happened so they could prevent the next one. And we used to have, weekly meetings. I used to have with the people from Harvard and, the big schools, the, top economists, people from the US Treasuries. And in maybe one of those meetings in 2009-ish, 2010, I remember saying, what about Bitcoin? Should we be thinking about Bitcoin? And I remember them saying, ha 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 ha, Bitcoin will never be important enough to be systemically important. We don't have to keep track of Bitcoin. It's just not going to amount to anything. And here we are today. The Bank for International Settlements has, I think several years ago now, declared it a systemically important asset. And countries all around the world are purchasing Bitcoin to hold in the place of gold, essentially, as reserve currencies or as a reserve asset. So this just, I think, my message to you is you have to keep an open mind, because in this world, there's lots of noise, there's lots of signals. Winnowing out the signal from the noise isn't easy, but I can tell you that, for something that started at 2011 as $1, and now, even though it's not as much as it was worth, yesterday morning, and the price fluctuates, the fact that it's worth as much as it is, and countries around the world are acquiring it, is something to pay attention to. This signal is getting stronger and stronger. So it's just another form of record keeping, but it's very transformative, as all record keeping is. So when we think about a ledger, I'm sure that you guys think about, you can think about like a ledger, we've probably all seen them, right? It's just like that, except for instead of me just having a copy of the ledger, all of you will have a copy of that ledger as well. We will all keep a copy of that ledger. So if we were a blockchain, each one of us would be a node, and each one of us would have a copy of that ledger. Okay, so just keep that image in your mind. Okay, so now the thing about the ledger, this ledger is a ledger where we can trust what's in it. And we can trust that what's in it, somebody isn't going to be able to alter it without being able to really overpower everybody else. Like I'd have to convince, more than half of you to change your versions of the ledger. So we're all going to keep a copy of it, and we're all going to know we can trust that ledger. And so one of the ways that this is achieved is through cryptography. So cryptography is one of the technological primitives of the underlying technology of Bitcoin. Okay, so it is a technology, and it sounds really, when you think of cryptography, maybe you, and I'm sure you think about it all the time. That you think about cryptography a lot. I know you do, right? Yeah, nerd joke. But when we think of it, we probably think of like secrets, right? Like the Enigma machine from World War II or something like that. Okay. So yes, cryptography can be used for keeping things secret, but cryptography is also used for keeping things safe and secure and immutable, unchangeable. And that's what this blockchain, this Bitcoin blockchain ledger is immutable. And it has integrity, and we know we can trust it through this cryptography. So with the cryptography, you've got cryptography for secrecy, but you've also got cryptography for safety and security. Some of you may even have heard of a digital signature before, and you may have signed something with a digital signature. So that's the kind of cryptography we're talking about if we're talking about cryptography for integrity. Okay, so the kind of cryptography that blockchain uses is called public key cryptography. That means that it uses two key cryptography. Okay, so some of you, I know this sounds maybe a little complicated, but it's not really, because if anybody who has had a safety deposit box, if anybody's ever had a safety deposit box, you know that when you go in to open your safety deposit box, how many keys do you need? You need 2 keys, that's right. And one key is held by the bank, isn't it? And that key we can think of as being a public key. Okay, so the bank has it, and it's a known key. They have it. They don't hand it out to everybody, but it's a public key. And the other key is your key, right? And you're not supposed to give that key to anybody. You're supposed to keep that one safe. That's your private key. Okay, so public key cryptography works exactly the same way. There's a public key and a private key. And when you go into your safety deposit box, you need both keys. So in your safety deposit box, you're going to put your ledger, right? We're all going to put our ledger in our safety deposit boxes. And to do that, we're going to need our public key and we're going to need a private key. All right. So now here's where it gets interesting, because in the digital world, in order for us all to keep our ledgers up to date, we're all connected by a network. So the internet, basically. But it's a distributed network. So every one of us can talk to every one of other of us. And this is how we keep our ledgers in sync, because we have to keep our ledgers updated so that we all agree on, who holds what Bitcoin, right? And so how do we do that? Well, we have this network. It's kind of like this big communication system. And what we do is we gossip. We gossip. We're really good at that as humans. Turns out networks are good at that too. So how we basically let each other know, remember, we can talk to you, I can talk to you, we can all talk to each other. And we just constantly gossip. And we say, what's your ledger look like? Did you, update your ledger. And we're just like gossiping. And we're keeping this ledger up to date so that all of our copies are in sync. Okay, so, and then, we're putting that ledger into its safety deposit box, signing it with closing it with our private key, making sure it's safe and secure. We're doing all of this as well to keep it from being tampered with. But what if one of us is like a bad record keeper? Like we want to maybe make out like we've got more Bitcoin than we actually do. Or make out like somebody else has more Bitcoin than they actually do. Well, because all of us are we're gossiping, and keeping all of these copies of the ledger, and we're all keeping them up to date, it should become obvious if any one of us is out of sync. It should become, because we can see, it's a transparent ledger, we can see each other. We're not keeping secret the ledger, we're just securing it. So we can see each other's ledger, we can see what's on it. It's like, hey, you over there, your ledger is not matching with everybody else's ledger. Out you go, we don't trust you anymore. So there's that aspect to it. So the transparency is really important. So we don't want secrecy because we want to be able to see. But we want to make sure that the entries that have been approved to be in there, they can't be tampered with once they're in there. Okay. So we've got the safety deposit box, we've got the ledger, where we all connected with each other. And then we've got the other thing we've got to do, though, is we've got to make sure that when we're sending the messages to each other, that those messages aren't going to be interfered with. And this is something called the Byzantine generals problem. So it goes back to Byzantine times, I guess, is why, or at least, it's been a problem for humanity for a long time. And so you've got this idea of these Byzantine generals who are going to sack a medieval town or a medieval castle, and they're surrounding it. And they want to know when they can attack. And of course, they're surrounding it, but they're far apart from each other. So they've got to send each other messages, like, when can we attack? And so they've got to be able to send out messengers to each other and communicate going across a very untrusted territory. And it turns out that this is the same problem as we've got in communications. When we're gossiping with each other, what if when when I'm sending the message across the network to you, somebody interferes with that and changes the entry that you're supposed to update in your ledger? So we needed to fix that problem. So that problem was fixed by the consensus mechanism that the creator of Bitcoin, who is named Satoshi Nakamoto, but who we really don't know. He's still mysterious. He's, like all good origin stories, we don't really know who he is. Is he a person? Is he a group of people? Is that a pseudonym? Nobody knows. People have claimed to be him, but it's not been proven and nobody really knows. And so he's still mysterious, but he is the person who published an 8-page paper, deceptively simple. I always get my students to read it because it's so simple when you read it, but it's like an onion. When you peel back the onion, there's these layers and layers, and it's just genius. I highly recommend it. It's a very simple read, but then the complexity starts to unravel. So Nakamoto consensus in solving this problem of communicated across an untrusted network is named after Satoshi Nakamoto, who is the pseudonymous inventor of Bitcoin and the blockchain. So how did he solve it? Well, he solved it by basically chaining together those safety deposit boxes. So just like you might have done in the medieval times, you put a letter in a sealed envelope, the king sealed it with his seal, and he sent it off with his trusted courier. Instead of just having one safety deposit box or one sealed envelope, you chain the envelopes together. So you put one safety deposit box inside another, and you use the private key for the one box to close up the other box, and you eventually get a very long chain. So think of those safety deposit boxes not as a chain of safety deposit boxes now, but as a chain of blocks. Blocks in which you have all of these records that go into your ledger. So what he did is he basically said blockchain is a chain of these digital signatures, a chain of these cryptographic ways of sealing up the contents of your ledger and chaining them together. So that if I were to change something inside of one box, in order to change it, I would have to unlock every other box to get inside that last box and change it. So that's really impossible. You can't do that in the amount of time that you have that the system gives you to update the ledger. So a new block is formed about every 10 minutes. So that is why it is so secure. It's just technologically a very, very difficult thing to do. And basically, instead of having the contents of the ledger, like a physical ledger, what you do in the digital world is you turn everything you have in the ledger into a digital fingerprint. And that fingerprint is bound to your private key. And so that allows you to not only make sure that that fingerprint can identify the contents, and if the fingerprint changes, you know that something in the contents is changed, but also because it's bound to your private key, you know that if you hold that private key, you can prove that you own that thing that is represented by that fingerprint. And what that did was transformative. That gave us a way in the digital world to do what we can do with our safety deposit boxes, which is basically when we have that private key, we control the contents, whether it's money or it's whatever kind of asset, or it's documents, whatever we want to put in our safety deposit boxes. Once we have that private key, we control it, and it is secure. And it can't be taken away from us unless somebody takes away our private key. And so that's exactly how it works with the blockchain. But it's just with cryptography and distributed communications and solving this Byzantine generals problem through this consensus mechanism, this way that all the ledgers can be, secured, the communications can be secured, and they can all agree amongst themselves that this is what the ledger should say. That's how we can place our trust in the blockchain, and how people can trust Bitcoin, because that's how I know that if I sign this with my private key and I send it, I put it in my safety deposit box, or I put it in your safety deposit box, I know that I can't double spend it. I can't give it to somebody else. That's what they call double spending. Or you can't double spend it once I give it to you unless you open the box with your private key and you put it in somebody else's box. Okay, so this is what we've been able to solve technologically. All these human problems that we've been kind of struggling with for centuries, and the thing that we've been really struggling with in the digital age, which is how can we make sure that when we put content up on the open internet, if I do my artwork, somebody's not going to take my artwork, or if I share my data, somebody's not going to take my data, or if we have eCash, somebody's not just going to reuse my eCash. Solving the double spending problem is what Satoshi Nakamoto did with the Bitcoin and the blockchain paper. So it was amazing. And if all this is still sounding a little bit, I'm not sure how it all fits together, this is I invite you to take a picture with your phones. And this is a great little video that I always show my students. And it will just show you in a very, very concrete way how this chaining together of all these blocks, these safety deposit boxes with the signing with the digital signature and the private key, how it all works. It's really a great video, so simple. Sometimes a picture is worth 1,000 words. So I could have literally just showed you this and not gone on so long for the last 50 minutes. Anyway, hopefully the 15 minutes will set you up to understand what's going on in this a little better. Okay, so we get, now that we have two keys, right? So when I want to, how do we sell, trade Bitcoin with each other? Well, it's this, we have a private key and a public key. And it turns out that the public key in the world of the internet, this world of distributed communication, becomes like your address. Okay, so it's kind of like, the bank where your safety deposit box is held. So if I want to send you or any of you Bitcoin, I need to have your public key. I need to know the address. Which bank is your safety deposit box in? And then instead of you opening up your box with your private key, what I do is, because I hold the Bitcoin, I'm going to go into my safety deposit box, which is held at my bank and my safety deposit box. So they're going to have their public key, they're going to open up. I'm going to sign with my private key, which means I'm going to open up my safety deposit box, and I'm going to get out my Bitcoin, and I'm going to send it to your safety deposit box, which I know because I know it by its address, which is essentially its public key. So off it goes over the network, that trusted network now, because we've solved the problem of communications over an untrusted network, and it goes into your safety deposit box. Okay? So that's really how it works. And in order to do this, we need something that we call a wallet. And the wallet is basically just something that holds your keys. And it maybe holds a little bit of other data too, depending on what kind of a wallet is. So basically I just, if I want to, first thing I have to do is I have to get a Bitcoin wallet. I'll have, a public key and I'll have a private key. I open up my wallet. You'll have an address. You either send me what your address is. It's a public address, so no worries there. You can send it to me. Oftentimes people use these QR codes because the numbers are very long and you can make a mistake. You don't want to do that because there's no help desk with the Bitcoin network. You can't say, oops, I sent it to the wrong address. So you have to make sure that it's going to the right address. And so scanning it is probably a good idea, or copy pasting. And then you basically, you just sign it with your private key and off it goes, and then you get a confirmation back, and And then once that lands in the public address of the other party, it goes out, gossip, 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 the ledger gets updated, oh, update, update. And then, after a period of time, you have to wait because it's this gossipy network, and blocks propagate, about every 10 minutes or so. And you have to wait until it's confirmed to be added to the blockchain. But essentially, it's all there. You can see it. There'll be a transaction number. You can go and you can search that up. Everybody can see. Oh, there it is. Now, your address doesn't have your name attached to it. It's a number, right? So it's like a numbered account. People can work out, they do network analysis and that sort of thing. They can, or other kinds of analysis. They can figure out oftentimes who is behind that account, but there's no name associated with it. So, when you look at the ledger, you can't necessarily say, oh, Victoria Lemieux did this transaction. There'll be a number, and you may not know that I am the person behind that public address, but you can see, you can confirm, and the other party can confirm because you will have that information which you can share with each other. All right, so that's essentially what it all looks like. We sign, we create a hash, and it goes up into this tree. It all gets bundled into to a block, which is like a safety deposit box, and then all the safety deposit boxes get chained together with this cryptography. So there's a lot of technical details that I'm trying to abstract away from, but hopefully you get the idea. The essential thing for you is you need a wallet to store your keys. And there are all kinds of different wallets. So this is important for you to know. Now, there's a video here, you can watch it. I think it's interesting to watch it. I'm not endorsing this video. It's just a video that I think gets a message across, and the message is this. There are many different types of wallets, and they are good for some things and not good for other things. So you might have a wallet that is what we call a custodial wallet that is held by one of the exchanges. What's an exchange? An exchange is where maybe you have your Canadian dollars and you are converting those Canadian dollars into Bitcoin to purchase Bitcoin. And in order to do that, you need to have a wallet where you have an address, right? And so these exchanges is where you change one currency, Canadian, into another currency, cryptocurrency, Bitcoin, or some other kind of cryptocurrency, Ethereum, Solana, whatever it might be. So if you have a custodial wallet, it is held by the custodian. In this case, the example I'm giving you, an exchange. And so that means that the keys, the public key and the private keys, are also held by the custodian. Okay, this is very, very important to know about because not your keys, not your coin. This is really something to remember in the cryptocurrency space. So if you yourself do not have control of the public and private key, if somebody else holds that because they're holding your wallet for you, then essentially you're not really in control of your cryptocurrency, of your Bitcoin. So there's other types of wallets, which we sometimes call cold wallets, that are not connected to the internet for the most part or communications network. They're not custodial. You hold them. So it might be like a Trezor wallet, which is a little device on which you store your Bitcoin. That's where you have your public and private keys. And it connects with the network when you connect your device to that network. And the ledger will keep track of what you hold, but you are the one that holds those keys. So that's the kind of way to store Bitcoin that is most recommended for the long haul, because otherwise you could find yourself, if the custodian that holds your keys defaults or goes away, they could go away with all your Bitcoin. So that has happened. That happened actually with a very famous case here in Vancouver. It was called Quadra CX. In 2019, actually it was in 2018, the CEO, this guy named Gerald Cotton, who is the CEO of Quadra CX, he went on vacation to India. And as the story goes, and again, it's a bit mysterious. Nobody really knows what happened. There's like lots of conspiracy theories. Apparently he died. And he died holding the private keys of many Bitcoin wallets, or many cryptocurrency wallets, wasn't just Bitcoin, that were that on behalf of others. So I know people who were industry partners at blockchain at UBC who actually, you know, they had money on that exchange when this guy disappeared. And they lost, you know, I know one person who lost 30,000. I know I had heard, I don't know them personally, of people who lost a lot more money than that. And the conspiracy is that nobody really, you know, there was like, did they find the body? Did they really know if the guy really died? Some people say he just disappeared with the private keys and he's living on an island somewhere. So the mystery goes on, the mystery goes on. But this is what can happen if we rely on custodial wallets and we keep too much money on exchange. So most of us, we keep, you know, a little bit of money on exchange because we're maybe trading in cryptocurrency, or we're, you know, it's just convenient, right? But if you have hundreds of thousands of dollars in Bitcoin or any other cryptocurrency, it's probably not a good idea to keep it all on exchange, because it can just vanish. There have been so many other cases. In 2022, the case of FTX, Celsius, there was a whole cascade of exchanges and you know, people's custodial wallets disappeared. So not speaking against custodial wallets, because it's convenient, just like banks are convenient, but we need to know who we can trust. And that's why regulators are coming out now and they're regulating in this space. They're saying, you know, you have to know your customers, you have to show that you keep track of the records, you have to show that you're solvent, and so on. So there's a lot more regulation and we can trust a lot more. But it's still very important to be cautious, because not your keys, not your coins. Okay, so this is kind of my attempt to teach you some of the basics in what I hope has been a relatable way of, you know, like really what the blockchain is. It's just a newfangled form of record keeping. It's just ledgers, and instead of just having one ledger, it's ledgers that we all hold, and we all gossip with each other in a way that is trusted, and with trusted communications, to keep that ledger up to date and unchanged over time. Now, I realize it's a lot. It's a lot to unpack. And this is just like, I'm looking down the rabbit hole and I'm going, that's a deep hole. And so I've taken you to the edge of the rabbit hole. But if you scan with your camera, if your cameras can do this QR code here, that will take you to a video that I've produced with my Blockchain at UBC team, that's based on my 2022 book, that basically goes into more detail, talks about the things that I've talked about now. It's not too long a video, it runs for about 15 minutes, but it'll tell you the story of Bitcoin and all of these things in a lot more detail, and you can always rewind if you want to go, huh, what was that? Because, I mean, of course, the first time I was learning about blockchain, I'm an archivist. My background isn't in cryptography, although I did train in cybersecurity while I was in banking. You know, it's taken a long time to understand this, so I appreciate that it's a lot to absorb in a short time. So, but hopefully there's a few resources on this website. Hopefully they will help you to understand a little bit more. So we've tippy-toed to the edge of the rabbit hole. We're maybe starting to fall down the rabbit hole. Hopefully it's interesting enough for you and relatable enough, because honestly, it's just the latest version of record keeping. It's just the latest version of how we do accounting. But just like a change in accounting was transformative in the 13th century, this one is also very transformative. All right, so this gets us to talking about things in global perspective, and I'm going to go a little bit faster through this section. As I was saying, not since the 13th century have we seen such a transformation in how we keep ledgers. And if I take you back to 13th century Italy, which is where double entry accounting was basically systematized and probably invented too, and the Medici family, who became a very powerful banking and merchant family. They did it through double entry accounting. It was transformative to keep track of debits and credits. This opened up a transformation in commerce that was absolutely unleashed commerce throughout the Mediterranean region and made the Medicis into an extraordinary, powerful family. Guess what? Blockchain is the equivalent of double entry accounting, that level of transformation, and it is unleashing the same kind of transformation in our financial systems as double entry accounting unleashed in the 13th century. It is becoming the future of money. So it's not only that we can pay for things in Bitcoin now. If you come to Vancouver, there's lots of shops, there's lots of places where you can actually pay Bitcoin. For me, I'm a hodler. I don't use my Bitcoin for that. There's other currencies like Litecoin that you can use for payments and so on. But what we're seeing is we're seeing a number of other current cryptocurrencies come up. Ethereum came after Bitcoin. It now has a market capitalization that is much less than Bitcoin, but still, second to Bitcoin. There's Solana now, XRP, any number of these cryptocurrencies. And not only can we use these cryptocurrencies to pay for things, but we can also use those cryptocurrencies as ways to run decentralized applications, to pay for things we do on those applications. So they're becoming what we call the rails, the underlying plumbing of a lot of the way that we operate our financial system, but a lot of the way we operate other things as well. And unlike what my colleagues back in 2010 at the US, when we met up at the US Treasury, said to me, which is that Bitcoin would never become systemically important. Unlike that, Bitcoin has definitely gone macro. It is definitely systemically important, and countries are acquiring it in large. Every day now I have in my inbox. Today it was the UAE just bought 10 billion Bitcoin, 10 billion worth of Bitcoin. Not 10 billion Bitcoin, but 10 billion worth of Bitcoin. So it's astounding. It's Luxembourg, Saudi Arabia, Switzerland, of course, the United States, China. So China, U.S. is the biggest holder of Bitcoin right now as a nation state, followed by China, followed by the UK. Every single nation state building up. So now, why? Why is this happening? Bitcoin is called digital gold. Because the other thing I didn't tell you is that there's only so many Bitcoin. There's a limited supply, and 95% of the Bitcoin have already been produced. And there's only 5% left to generate. And because it's secure and stable, and it's a limited supply, well, what happens with economics when we have a lot of demand for something and a limited supply? Usually price goes up. So this is in contrast to what people are saying is the story of fiat money, government-backed money, Canadian dollars, US dollars, all the other dollars. Because what these governments can do, we know this, they can print, when they need to, they can print more money to pay off their debts. They can just generate more money. But what this does is it floods the market with, this excess capital, which causes inflation, which brings the real value, the present value of money down in comparison. So this is why house prices are going up so much and everything, food costs more, because there's been so much money, liquidity coming in, because these countries are printing more money to get themselves to sustain unsustainable debts. Our own, for example, here in Canada, that the value of this money is going down because we're flooding the market. So again, law of economics, not too much demand, yes, but more supply than demand, the value is going to go down. Bitcoin's the opposite. So people are equating it with digital gold and acquiring it like gold, and this is why countries are starting to stockpile it. So the other thing that's happening is that countries are introducing stable coins because the price of Bitcoin is very volatile. As I said to you, like $10,000 value drop since the morning to this afternoon in Bitcoin. And so the average consumer, like, you and me, we don't want to have like, okay, you quoted me a price in the morning that was $10 for my cup of coffee, and then by the afternoon when I come to pick it up, it's like, double the price. So or you're not acquiring the same value. So we need stability, and that's what stable coins are. So central banks, they've been worried about Bitcoin, obviously, because it's a threat to their monetary system because they can't keep printing money and getting away with the shenanigans they've been getting away with. And so that's another reason why they've been acquiring it, but they came up with the idea of central banked digital currency. Okay, we're going to create our own digital currencies and we're going to control it. And instead we're going to outlaw Bitcoin, which they couldn't do because it's a decentralized network. They couldn't control people all around the world, but they were going to try. And so they were going to outlaw Bitcoin, and they were going to introduce central bank digital currency. So here in Canada, we worked on that, for quite a few years. The Bank of Canada tried it, but it just never took off. But now we see stable coins, which can be offered by banks or by private companies, are coming. And what they are is they're a coin that's offered that's pegged to and backed by a currency. That could be fiat currency, so a USD stablecoin is a US dollar backed stablecoin. There's now the digital euro. It's experimental. I've actually built it into software that I've been working on. And there's the digital yuan, which is China's version. So nation states are building out or adopting stablecoin, and then they're regulating the stablecoin. But stablecoin can be pegged to Bitcoin, for example. It can be pegged to anything. It just has to be backed, and it has to be stable in value. So that's what we're seeing also. So we don't have a Canadian stablecoin. Don't know that I have not heard that there's plans afoot to introduce a Canadian stablecoin. We've abandoned, or I don't know if we've abandoned it, but there's not a lot of talk about our digital central bank-backed digital currency. But the big economies are bringing in a stable coin in their currency, and sometimes more than one, most often more than one. So here's the thing: cryptocurrencies just don't. It's not just about money and decentralized finance. It's also about a whole swath of other applications. Because remember, at the end of the day, it's a record-keeping system, and records touch everything. So we've got, I'm going to skip over this. We've got crypto assets, which I've been talking about mostly, but we've got, governance, so it can be used for voting. We've got automation, we've got identity management, we've got process optimization, we've got data provenance and authentication, all of these different application areas. So, for example, the record keeping of settling even your stock price, your stock acquisitions. It used to be very, very convoluted back office settlement. The banks would have to get together, exchange documents and agree. And, there was a whole team when I worked at the bank doing that. Now it can all be done on blockchain instantaneously by sending, just the way I talked about sending Bitcoin to your public address. It's much more streamlined, and it's instantaneous, and it's much less expensive for the banks. Supply chains, for example. So we can keep track. Remember, what we put in our safety deposit box and we secure with our private key, we can put anything in there. We can put value, we can put documents, and as it turns out, we can put blood oranges. So the Italians are actually using blockchain to track the provenance, to keep track of records to do with the origins of blood oranges. Say, these are authentic Italian blood oranges. Because what we have is a lot of fraud going on. We have this too in like fishing, where people claim that it's one thing and it's another. So when we can trust the records, we can trust the origins of the record keeping about these assets. There's some wrinkles, it's hard to make sure that the asset itself is what is represented on the blockchain. So there's things like that to still sort out, but essentially it can be used to make supply chains more efficient and more trustworthy. So I think this one was about real estate. I don't know where the label for that one went, but yes, this is about the UAE has now created a real world, it's called real world assets, where you're actually trading real estate using a blockchain. So the real estate is what you put in your safety deposit box. It gets turned into a digital fingerprint, what we call a token, and that gets traded on the blockchain as well. And you can fractionalize these too, just like you can divide up Bitcoin, you can divide up the value of the real estate, and you can trade it. So that's going on the blockchain. Dior has put sneakers on the blockchain. They've also turned the sneakers into a digital fingerprint to say, this sneaker, this fingerprint represents the authenticity of this sneaker, and we're putting it on the blockchain. And if your private key is linked to that digital fingerprint, that token, what is called a non-fungible token, you may have heard of them, NFTs. They became very popular in about 2019, 2020, and they were associated with Bored Apes. And other very strange things that people traded for millions of dollars, and then the whole market crashed. But it hasn't gone away. They're putting sneakers on the blockchain as NFTs to make sure that the authenticity and the provenance of the sneakers can be traced and tracked and associated with your private key, so your ownership can be proven. And finally, blockchain is meeting and marrying up with artificial intelligence. And so this is where my research has landed. So basically, I'm really concerned with what I call the data double spending problem. So basically, when you consent to share your data with, 23andMe or somebody else, let's say, maybe you're okay with that, but maybe you're not okay with them taking your data and selling it and sharing it with somebody else. And the thing is, that's what's happening all the time now. All of our data, all of our personal data, whenever we go on the internet, is being, even if we consent, click yes on something, and we just want to use it for that service, it's all being gathered and it's all being sold on, and we have no control over it. It's just like in the days before we had Bitcoin, when e-cash was just, we couldn't secure it. It could be double spent all the time. So I've invented a way to prevent the data double spend using blockchain. And we have embedded this into technology where we can take your data and allow you to use artificial intelligence on demand, like a ChatGPT, without having the ChatGPT steal all of your confidential data. without your control, and then reuse it however it wants to train its models or to sell on to somebody else or accidentally spill out on the open internet. So this is where we're going. It's called data sovereignty, and that you should be wanting to look out for your data sovereignty, to protect the integrity of your data against predatory artificial intelligence, because we are moving into the age of AI. And so we need blockchain technology, not just because it's transforming our monetary system, but because it can also protect our human right to privacy. And that's really what I care about and what I'm building out with blockchain. So it's amazing what you can do with record keeping and this newfangled form of record keeping. And as somebody who has studied record keeping all my life, I never kind of expected when I did my PhD in filing that I would end up talking to you about global financial markets and cryptocurrency. But as it turns out, record keeping is pretty important. And Bitcoin and blockchain are the new forms of record keeping and the way of keeping track of value, transferring value, and owning value, including your data. Okay, so that's it. That's all I've got to say right now. I've gone on like probably way too long, so I'm going to turn it over to my great partner here, Kevin, who is going to update you on, what to make of Bitcoin and the cryptocurrency market.
Thank you, Professor Lemieux. What an amazing introductory lecture to Bitcoin. Some of the examples that you give were so vivid and so relevant to our lives, and then I'm sure everybody can appreciate some of the humor in Professor Lemieux's lecture. So I come from a different perspective. So Professor Lemieux was very academic. She was helping everybody to understand blockchain and Bitcoin technology intuitively, from structurally. But then the way some of the market participants think about the problem is, well, the best way for adoption of a technology is for people to make money in it, right? You make some money, right? Some people accidentally buy some Bitcoin, right? They make 5x on their money, and then all of a sudden they become Bitcoin maximalists. So that's kind of where our business and where our firm come in. So first disclosure, none of this is financial advice. But my firm is called Virgo Group. We are a regulated crypto digital asset trading company. We're regulated in Canada and now also in the United States. We offer 5 different products and services. We have a trading platform for the retail investors. We have an OTC trading platform for high net worth investors and institutions. We have a payment business for global remittances. So just like Professor Lemieux just mentioned, now with the enablement of stablecoin technology, individuals and businesses can actually do instant global money remittances on an almost cost-free basis. And it arrives in your wallet the next second. Such an amazing technology. All the banks are running out of business and they're crying. They're trying to catch up. We also have an asset management business, it's called Virgo Digital Asset Management, for which I'm the CEO and the Chief Investment Officer of. And then we also have a wallet app. It's called Wallet V. So as mentioned, a Web3 wallet or a crypto wallet is an application for you to hold your crypto assets on chain. There are advantages of holding your assets off chain either in a cold wallet, a hardware storage, or as some may do it, they get a titanium metal board and they take a chisel, they chisel the public key, right, into the titanium board so that it's fireproof, waterproof, everything proof, nuclear war proof. And then they find a spot in the woods and then they bury it, and they only go back to it when they need it, right? But not all of us can afford to go that extreme distances. And also, if there's trade-offs, you can keep your assets extremely safe, or keep it on hand so that you can trade or spend or swap or or generate yield, do all of those things that make the blockchain interesting. So there's a place and a usage for a wallet app, and we have a wallet app as well. So 5 different products serving all sorts of client needs. We're regulating Canada. We just got our SEC license in the United States this year, and we're also expanding globally for our businesses. A little bit about myself. I've been a trader and portfolio manager for about 15 years. I have an engineering background from University of Toronto, and I just kind of fallen into the trading world a couple years out of school. Previously, I was the head of trading and portfolio manager at 3IQ Corp. Not sure if anybody is familiar with that company, but we are the company, and my team was the team that helped bring the first Bitcoin fund onto the Toronto Stock Exchange. And that was one of the first exchange-traded fund, regulated public funds on Bitcoin in the entire world. And Canada was way ahead of the world. We beat the US on having Bitcoin ETFs by about 3 years. Oh, I missed my slide. Okay. I was supposed to have a slide in there, but it was a really nice chart. But we'll just talk about it. Bitcoin has this phenomenon of a 4-year cycle. Has anybody heard about the 4-year Bitcoin halving cycle? Perfect. Okay, that's great. So Bitcoin has this mechanism called halving, right? So every 4 years, the new supply of Bitcoin reduces by half. So if we use Bitcoin as a digital gold analogy, it's similar to having a gold mine, but then the gold mine is being depleted over time, right? Because Bitcoin has a finite overall supply. So it's like a gold mine, right? You're taking out 1 nugget every day, right, for 4 years, and then the halving happens. You only get half of what you had every day, but it's still producing, right? And then another 4 years, you only get half of half, so a quarter, and it goes on, right? It would take a large amount of time for all the Bitcoins to be mined, but the production is reduced by 50% every 4 years. So as simple law of economics, supply and demand determines price. So with the halving mechanics, and if we assume demand remains relatively stable, we are introducing to the market what is called supply shock, right? We're taking half of the new supplies away from the market. And even though that might be a small marginal change, things like that can sometimes produce a very pronounced effect on the overall market, right? So think about real estate. I'm sure everybody is familiar with real estate. What if the government reduced by new permits issued every year by half, right? Housing prices are going to go through the roof, right? Because all of a sudden there's like new supply reduced by half. So similar thing happened with Bitcoin. So with this halving, what usually happens is smart money anticipate the halving to happen because it's programmed into the blockchain. People know ahead of time. Everybody knows ahead of time when it's coming. So smart money positions themselves, right? They buy Bitcoin and hold in anticipation of the halving. And when the halving happens, the supply is reduced. The price goes up. And a lot of retail investors and speculators, right? They see price movement, and then they flow into the market. They rush into the market, hoping to make a quick dollar, right? So that propels the market up. I had a really, really nice chart on this. It's rainbow colored. That propels the price up, right, to unreasonable levels, right? Some people, including some institutions, they may leverage themselves, meaning borrowing debt, right, to buy Bitcoin, right, just to chase the market. And then something happens, right? Something bad news happens. Usually it starts off with a snowflake, and then it triggers an avalanche. And all those investors who leveraged into buying Bitcoin are forced to deleverage, meaning selling their assets to pay back the debt. And that crashes the market, right? And back to a very, very low level. And usually this whole cycle, this whole reset, rise, and crash cycle takes about 3 to 4 years to complete, right? So that in conjunction with the next Bitcoin halving, which is just 4 years away, right? It kind of resets the cycle, and you just see the same movie over and over again, right? So in Bitcoin history, we've already seen 4 cycles. We've seen the same movie playing out 4 times. Right now, standing at November of 2025, we are actually on schedule to see another crash because of the 4-year halving. But our thought is that something has already changed for this cycle. So that movie might be over. We're not going to see another sequel, right? That has something to do with the Bitcoin ETFs in the United States, right? So the SEC approved Bitcoin ETFs to be traded on the U.S. stock market in January of 2024, so almost 2 years ago. And since then, right, a lot of investors, instead of getting a wallet, opening up an exchange account, wire your money to the exchange, and then buy Bitcoin, right? Now, a lot of people have the convenience of buying Bitcoin in the form of ETFs from their stock brokerage account. So that has made things a lot simpler, right, for individuals and also for institutions. So a lot of money have flown into the ETFs. On an average day, right, the ETF is seeing about somewhere between $400 million to $500 million of inflows, money coming into the ETFs, coming into these funds to buy Bitcoin. So that number has, and because we've had so many halvings, the number of Bitcoin, the supply that's being produced by the blockchain is only 450 Bitcoins per day, right? So we're talking about $500 million versus 450 Bitcoins. So that's a difference of a factor of 10, right? The ETF is about 10 times the daily supply of Bitcoin. So now the biggest shock in the supply-demand equation is no longer Bitcoin. It is no longer Bitcoin production schedule. It is now the demand generated from the ETFs, right? If we were to show you on the chart, you'll see Bitcoin's daily production schedule taking a big percentage of its market cap value, and then over time it just reduces naturally due to the halvings, and then boom, we have the ETFs coming in, playing a much bigger role. So because of that, the supply shock is no longer there, right? So that's why when we had our halving last year in 2024, in April of 2024, we did not see the price just going to the moon, right? Because the supply shock was front-run by the ETF. And also, the deleveraging isn't as likely to happen this cycle because we're seeing 10 take the United States, for example, right? We're seeing the regulators and their government embracing Bitcoin, allowing institutions and businesses to trade and hold Bitcoin, right? But they have to do that within a compliant framework. We're also seeing businesses getting smarter with their capital structure. So in the last cycle, we saw businesses borrowing money to buy Bitcoin, right? So when the price comes down, they are forced to sell. But in this cycle, we're seeing companies financing using their equity, right? Equity is permanent capital. Equity, if you finance with equity, you don't have to pay it back, right? It's not like debt. You don't have to pay it back. So we're seeing companies financing with equity so that they're no longer pressured to sell on the way down, right? So our theory is that this upcoming cycle is not going to be as severe of a crash as we've seen before due to all those reasons. So wish I had my slide here, but that's the takeaway. We think the short-term market volatility is just a product of the AI bubble being. There's a little bit of an AI debate, right? Like whether it's a bubble or whether it's it's an inevitable direction of our society. There's a little bit of debate there, and some investors are concerned. Bitcoin is the canary in the coal mine. When there's something bad or good about to happen with the global economy, Bitcoin is usually the first and the quickest to react. So that might have something to do with it as well. But it just so happened that the mini market crash happened right when it's scheduled to crash. So this type of analysis is something that we do for our clients on a regular basis. If you're interested in exploring more about the investment angles, the markets on Bitcoin and digital assets, please visit our website. We have our QR code and website on the banner over there. Thank you very much. It's such an honor for me to be here.
Thanks very much, Kevin. That was great. And also Victoria. Awesome. We are starting to run out of time, so we're going to try and do as many questions as we can, as quickly as we can. I know that we're up against the clock, but can I invite Victoria and Kevin to come up to the stage? And I'm going to stand here and spot some questions. We've got some roving mics in the audience, and we'll fire away with Q&A in a moment. Okay. Have we got any questions from the audience? Yes. I'm going to run with the gentleman straight in the centre there.
A couple of questions to ask you about the world is actually buying gold, not digital crypto. Take El Salvador, for instance, who was one of the first to move into it, has now sold most of it. And also Tether, who is a crypto-backed company, is buying gold. So how can you confirm that crypto or Bitcoin is going to be I don't see it in the market. The world banks are not buying Bitcoin, they're buying gold.
Do you want me to take this one? Okay. Yeah, I don't disagree with you that banks are buying gold. I think we're seeing both. We're seeing banks, we're seeing nation states acquiring gold, but we're also seeing them acquire digital gold. And the reason they're doing that is because I think we are looking at a time where we might be seeing a sovereign debt crisis, because fiat currency debt has ballooned in so many countries, and it's unsustainable unless drastic measures are taken. So I think this is why they're stockpiling gold, they're stockpiling stockpiling digital gold. And also, sad to say, but the geopolitical climate is very tense right now. And, it could, there's fears about war in Europe, and of course, tensions everywhere, the Middle East. So this is what is happening. So Bitcoin is the digital version of gold, and so it's stockpiling of gold, and digital gold.
Sure. Just want to add to that. If you look at which countries are actually buying the most amount of gold, I think China is number one. Japan and Korea are closely following behind. Mostly Asian countries, and you can actually see in the price action, right? If you look at it during our daytime, North America daytime is the price action is pretty much flat. But if you look at our overnight trading on gold during Asia's trading hours, yeah, there you see a lot of activity, right? You're also seeing, I actually just studied a report on this. You're also seeing a reduction in jewelry demand, right? Because gold has three uses: jewelry, store of value, and industrial, right? Gold is used in a lot of electronics, so the industrial demand hasn't really been affected. But because of the price appreciation, jewelry demand has decreased considerably by I think 15% or so, while investment demands have picked up, right? And then if you look at all the countries that are buying a large amount of gold, those are countries that are concerned about either a potential U.S. sanction, right, in the case of China, or number two, diversifying their foreign reserve stockpile, right? Especially after the U.S. president took office, right? The way he's applied tariffs on a lot of countries, right? Some countries are thinking, oh, we better have an alternative asset rather than just sitting on the sole U.S. dollar. So there's a lot of different reasons that goes into countries buying gold, and those same countries, they're also considering Bitcoin. They're not picking one thing on the menu. They might be picking both, right? Maybe they might be buying more gold and less Bitcoin, but I think most countries are either doing both or considering doing both.
Great, thank you. We had a question over on this side as well, I think we did. Yeah. The lady just here.
Yeah, I was just hoping you could touch on what happens with Bitcoin when it reaches its maximum amount, because I think it's 21,000 Bitcoin, I think, is a total, and you mentioned that there's only 5% left, but with the halving, I think I understand it's 100 to 120 years, I think, before we get to that final point when no more Bitcoin is able to be mined. So with knowing that there is that finite amount and the price that it currently is, how does it really become a global currency to be used when it will eventually kind of run out? I don't understand how it becomes that kind of currency. So it will only ever really be held as a store of value, or is the intention, right now people can use it as a currency, obviously not advisable, but with having that end point, I don't understand really how it stays relevant over time.
Well, I'll try. I'll give an answer, and then probably you're probably looking at these things a lot more than I am. But the way that I see it is that once the supply runs out, it's there'll still be a demand for it because it is a store of value. It's not. I don't think that we talked about in the early days, Bitcoin as being the next money, and kind of like cash, we'd all be, buying and selling it. But I think really stable coins or other kinds of cryptocurrency like Lightning, which is a layer over top of Bitcoin, those are the kinds of things. I think stable coins will more likely be what we use on a day-to-day basis as digital money, but that will be pegged to Bitcoin. And so that's why Bitcoin will hold its value. It'll be like the old days monetary system when the dollar was backed by gold. So it'll be the asset that the money that we use, the digital money, which will likely be stablecoin, will be backed by. That's kind of how I'm currently seeing it, but you know, it's hard to predict the future.
That's actually a great question. It's the second time I've heard of this question. The first time was when we were applying for a Bitcoin ETF. And then we wrote in our prospectus that Bitcoin has a finance supply of 21 million, not 21,000, 21 million. And it has a finance supply. It has this halving mechanism, right? And the regulator asked the exact question, right? How do you know that it's a finance supply of 21 million, right? Prove it, right? And then and then I thought the regulator was like, this was one of those got you questions, right? But it's a very nerdy answer. But the first Bitcoin block, the block reward was 50 Bitcoins, right? That went on for 4 years. And then it was halved, 25 Bitcoins per block. That went on for another 4 years, and then halved again, 12.5, and then 6.25, and then 3.125. You can just keep on and on and on, right? But if you take a number, divide by 2, you can divide by infinite amount of times, and you get a very, very small number. But that number is still non-zero. So it's an infinite geometric series, right? Like it converts with 0 at like a very, very, very far distant horizon. So as the network evolves, as time passes, you're just going to get incrementally smaller and smaller mining rewards. And the hope and the thesis is that Bitcoin's value gets increases over time, so that the number of Bitcoins per block, even though small, is still sufficient to secure the network, right? That's actually one of the potential risks of Bitcoin, is if it gets to a critical point where the reward per block is too small and the price hasn't appreciated enough for the miners, for the nodes on the network to secure the network, right? So that's one question. That's your first question. And the second part is, what happens if we run out? So Bitcoin, like all natural resources, is finite or scarce. On Earth, there's a finite amount of gold, right? We can extract it from the ground, right? And it's going to get harder and harder over time. The more we extract, the less there are that remains underground, and they're going to be deeper, right? And there will come to a point where almost all of the gold is extracted. But that doesn't get in the way of us using gold as a store of value or even of a medium of transaction, provided that the thing that we're buying, right, justifies the price of gold. Right? If I'm buying a house, maybe a few gold bars will do the job, right? But if I'm buying a coffee, the gold is not the right instrument to use.
Yep, I've got a question here in the center. Gentleman in the grey.
I'd just like to know, what is the process of cryptocurrency mining? Like, I don't understand it.
So, okay, so the whole process of mining is that part where, remember I was saying where the ledgers all have to agree on, the holders of the ledgers all have to agree on what is in the ledger. And so that's how they reach a consensus. And so the mining process, we call it the mining process only with reference to Bitcoin. When you're talking about other cryptocurrencies, it's called validation because their way of reaching consensus is different than Bitcoin. But let's just keep on Bitcoin. So in Bitcoin, the process of mining it's kind of like it's a metaphor. And so really what you're doing instead of mining is you're just solving a puzzle, computational puzzle. And so remember I told you about the fingerprint, right? The digital fingerprint. And that is basically in cryptography what that is called is a hash, and it's a 256-bit number, like string of numbers, basically. And so what the miners are really doing is they're solving a computational puzzle wherein they have to come up with a number that when added to that hash, that other 256-bit number, it comes up to a number that starts with an equivalent number of zeros. And so this is what we call the, the hash power of the Bitcoin network is how many zeros they have to come up with. And I don't even really know, right? Do you know, Kevin, how many zeros it is right now? I haven't been keeping track of that lately.
Dynamically adjusted based on the total computing power on the network.
Yeah. But it's somewhere in the area of, like, it's
a very large number.
Very large number. And they have to, so it's dynamically adjusted because of what Kevin was saying, that they have to make sure that, that the supply doesn't, it doesn't drop or doesn't increase, so that the value of that the miners are getting, because they get a reward every time they solve that puzzle, they get a reward. And so basically what that's doing, when they get that reward, if that reward isn't big enough, then they'll drop out, right? So they won't mine anymore. And it's the miners that secure the network, because the more nodes, the more people you have with the ledger and keeping track of the ledger, the more security you have in the network, because you've got all these copies. So you can say, oh, that one's wrong, get out, and these are all good, so we'll keep those. So they get that block reward by solving that puzzle, and that's the process of, by basically, we call it brute force computing. This is why it takes a lot of energy to do Bitcoin mining, because they're just running through numbers until they get that number that will give them the infinite amount of zeros at the beginning of the hash, number. So that's what it is. And it takes a lot of computing power, but that's also why, this is something else to look out for, why quantum computing is considered a potential threat for cryptography in general, but also for Bitcoin. But there's, many very smart Bitcoin engineers that even back in 2018 were already working on how do we upgrade the cryptography in the Bitcoin network to be quantum safe. And so I feel somewhat confident, and never be 100% confident, but confident that it would withstand quantum computing, because quantum computers are like infinitely more powerful than our current computing. And so what takes tons of time and is not computationally possible to solve, of breaking all the cryptography of the Bitcoin network now could be broken with a very powerful new form of computing, which is quantum computing, theoretically. So, but people are working on solving that, including some of my colleagues at UBC who work on quantum safe blockchain. So I hope that kind of answers it for you a little bit.
We do have a question further up the back there that I'd like to take, and then I can come back to you, but we are almost out of time because I know that we're 15 minutes past, and I'm just conscious of people's time and evenings.
So Bitcoin I find it interesting as a store of wealth, but doesn't seem super practical to me for transactions because of the volatility. And I have some friends who've told me that they expect that at a certain amount of adoption that the volatility could decrease and it could stabilize and become more useful for transactions. Of course, with like the Lightning Network and tools like that for transaction volumes. But I'm wondering if you agree with that, and if you think that at some point the price of Bitcoin will stabilize enough that it could be used for transactions, or if it'll be more like stablecoins that will become the tool for transactions, for like widespread daily use.
Well, maybe you want to try and answer this one, Kevin, because I kind of said I think stablecoins are like.
Yeah, that's a great question. So
So you mentioned a few great points here. Number one is volatility, and number two is the potential use in transactions. So volatility, that's my favorite topic. If you hold Facebook stock in your portfolio, you will find that Bitcoin is no more volatile than Facebook. It's about the same, right? If you look at the top stocks in the whole world, right, they're all American stocks. You have Google, Microsoft, and Apple. These stocks are less volatile than Bitcoin. You have Nvidia, Tesla, Facebook, and these are more volatile than Bitcoin. So it's already been, I would say, domesticated after its inclusion in the ETF, as an ETF in the US. So now the big players, the driving forces that determine Bitcoin price are American institutions or like global institutions. And Bitcoin is no longer the wild bear that it once was, right? Now it's becoming more like a house pet. If you look at its volatility, right?
Like that part.
Yeah, but if you hold both Bitcoin and Tesla and Facebook in your portfolio, you're not going to see one being more volatile than the other. They're about the same. And number two, if you want to use Bitcoin for daily transaction, there's actually one thing that you have to overcome, which is Bitcoin's block time. Bitcoin is designed to have an average block time of about 10 minutes, and this is an average. In practice, it could be anywhere between an hour to 2 minutes, right? Like five times on either side. And a lot of it is randomly determined. Like how fast a block is randomly determined. It depends on how lucky the miner get, right? When solving the mathematical, the cryptography problem when packaging the block. So due to that property, right? Like often vendors will ask for 3 blocks of confirmations on the blockchain before the vendor knows that, okay, I've got your money for good, I can now give you the merchandise. And that can sometimes take, right, if you're extremely unlucky, right, it could take upwards of 2 hours or 3 hours. And that
It gets very cold.
and you have to wait there, right? That makes it extremely unfeasible for daily use transactions. But I can tell you what some people do, right? Like, for example, there are companies, I think Goldman Sachs and Morgan Stanley are offering this as a service. You can bank your Bitcoin with a big bank, and they'll give you a credit card. You're borrowing against your Bitcoin holdings, and you pay back the credit card, right? It's the same thing, except for you don't have to sell your Bitcoin. That's actually extremely tax friendly if you're a sophisticated high net worth individual, right? If you've made $1 million times on your Bitcoin, you don't want to sell it and get a huge tax bill. Instead, you can spend it, right? You can spend what you need and only sell what you need to sell, right, to finance your lifestyle. And stablecoins is another way to work around the fact that Bitcoin isn't as feasible in terms of day-to-day transactions. However, if you're buying a large quantity of merchandise, right, something of high value from somebody else that's super far away from somewhere else in the world, then Bitcoin might become a feasible method of transaction, because there may not be a bank that can serve you both.
Okay, I think we've got one more question we'll take up here, and then we'll close off Q&A. Apologies, but we are out of time. And then after we've finished, I'll invite Sue Adams, the chair of the Whistler Institute, to come up and say a few words.
Great, thank you. I was wondering if you could talk a little bit about the future of privacy coins. We've seen while Bitcoin has stabilized and even gone down a little bit in the last little bit, we've seen privacy coins like Monero and Zcash and stuff just go wild in the markets, like they're the top performers. I'm just curious if you could share why you think that might be going on and what the future looks like for privacy coins.
Yeah, thank
And
you
I warned
for-
you I was going to ask this question.
Yeah, and thank you for asking the question, and I think that's something to look out for because, word on the street is that some of the older holders of Bitcoin, the old public addresses, the old wallets, are cashing out and moving over to things like Zcash or Zcash, as you called it. Like, that's a Canadian way we should call it. And so the reason for that is because, as the market is maturing, basically, is, we're seeing that we have large nation states and institutional holders, and, even, us as kind of retail holders or whatever, individual holders of Bitcoin. It's a transparent ledger, as I explained to you guys. And so everybody can track the transactions. And so every time you sell or make a big move, that people can see. And so individuals are concerned, but also the big institutional players, the nation states, are concerned about the transparency of the ledger. And so there's a demand for maybe more privacy, and that's what things like Zcash and Monero have offered for quite some time, but it's now just becoming obvious that, to the bigger players that, hey, maybe, we need to go back to this. And, think of the roots. I didn't really get into kind of the cryptography roots of Bitcoin, but, it came out of like the crypto listserv and, people who were cryptographers concerned with privacy and individual rights and freedom. And that's kind of the ideological roots of Bitcoin. And so that is kind of, why it's interesting to see some of the older wallets, or what I haven't verified this myself. And like in the Bitcoin space, we trust, but we always verify, and we always do our own research. So I'm passing on a little kind of unverified information here, but it's interesting, and I do intend to look into it because it wouldn't surprise me, because we're seeing like the ideological shift might be back to kind of the roots of Bitcoin and saying, yeah, we need privacy, and we need to protect individuals' privacy and freedom, and we can't do that with the transparent ledger. And so it could be that this is something to watch for. It's a very interesting move. People are saying that Zcash is going to go up quite a bit because people are moving into it. I don't know, but that's to be looked into. And I do, I always do say, when you hear something, look into it, start to do your own research. So like I intend to, I haven't done it yet, but I find it's a very interesting development. Certainly I'm a privacy researcher, and I'm developing technologies that are to protect people's privacy. So I'll always be one of those people that say, yeah, this is a good thing.
Okay, thank you. Thank you, everybody, for your questions. Victoria and Kevin. I'll invite Sue Adams up.
You can stay there. So I also want to say thank you. I want to say thank you to our supporters. So many familiar faces and a lot of newcomers. So welcome to our speaker series with the Whistler Institute. To Victoria, thank you. It's been an absolute pleasure working with you. Sort of back of house, we get to spend more time with the speakers in setting up the events and spending time after we close off. But Victoria, you've been such an asset to us. Thank you so much. Been so helpful. Sam and Adam would agree. And for introducing Kevin. And Kevin, what a pleasure to meet you. And thank you very much also for sponsoring this evening. So that's great. So tonight also gives me an opportunity to recognize Sam, and she also, in the beginning, very nicely introduced herself. So it's a pleasure, Sam, to have you on board working with us and putting on a great event tonight, and also for the last couple of weeks of herding the cats to make it all come together. So thank you, Sam, and welcome aboard. Adam, thank you as one of our board members for assisting in the event organization tonight. Much appreciated. And again, I'd like to recognise our sponsors, because without our sponsors and our supporters, we couldn't bring these interesting talks to our community. So I won't go through them again, but they're there on the board. And thank you to our volunteers. I don't know if Frank and Donna are still here, who have, there they are at the back, who've been our welcoming reception and registration team since pretty much day one. So thank you, Frank and Donna. And also, I would be remiss if I didn't recognize our board of directors, who also volunteer a lot of time. So thank you to our volunteers. Tonight has been the second in our series for this year, where the lineup is designed to dive into challenges that affect us all. And I have to say, I've got to do a lot more diving to try and understand what happened tonight. But, you know, maybe I might not be here to see the end of this story. So that it's designed to bring challenges that affect us all. The modern world of currency, climate change, and current economic policies are coming up in May with Dr. Mark Jacquard. Youth mental health in February with Dr. Kimberly De Silva, as she speaks to when worry becomes more, understanding anxiety in today's youth. So that's our February session, so that'll be very interesting. More will come on that in our newsletter and through our advertisements. So our commitment to make a difference in our community, as Sam referred to in her introduction, by exploring opportunities for lifelong learning, and that in turn inspires innovation and creativity that might influence change. And we also need a little help in doing that. So again, on behalf of the Board of Directors, I ask you to consider the Whistler Institute in your personal and corporate giving. And as 2025 draws to a close, may I remind you that we are a registered charitable society and we issue tax receipts for your donations. So myself and our directors are happy to chat with you. If you're looking to sponsorship or making donations, we're happy to meet with you and talk more about our organization. So thank you all for another exciting and excellent evening. Many of you will be busy tomorrow on Blackcomb, so enjoy the snow that's up there. And we, on behalf of the Board of Directors, we wish you peace and joy for the holiday season. So thank you all again.